Capital Record, where we defend free enterprise and capital markets because we believe in the dignity of the human person. Hello and welcome to David Bahnsen's Capital Record, brought to you by National Review, where today we are really right in the strike zone of exactly what Capital Record exists to talk about. We're talking today about an issue that I swear to you, I never thought we'd talk about. I never believed that there would be a need for a podcast about the United States of America federal government taking equity positions in companies, having demands on who the CEO of companies would be, demanding licensing fee agreements in order to approve certain deals, various elements of state intervention that free market guys like me would have said before, hey, if we violate this, or this principle, we're going to end up at a place that could almost look like this. And instead, we've gone to that place rather quickly. And yet today's podcast is really only very little going to be about critiquing this policy. The term is often referred to as sort of state-run capitalism. I think I've read 100 pieces in the last 25 years criticizing China for their post-Deng Xiaoping movements towards markets, which many Westerners are happy to have seen, versus the Mao Zedong communist China. Obviously, the Deng Xiaoping move towards greater market embrace in China opened up a lot of markets for China and created a substantial amount of wealth that made things for a certain part of their country much better. But the criticisms have always been China cannot ever really be a free country by flirting with certain economic freedom and yet resisting political and civic freedom. I'm in that camp. I don't believe Milton Friedman ever said it, but even if he did, I would disagree that a country that has economic freedom inevitably leads to a country of civic and political freedom. In fact, I think he taught the exact opposite, that you enhance the chances of one by one or more by embracing one, but that one is necessary but not a sufficient condition to total freedom. And so the critique that many of us pro-markets folks in the West have had about China is that they were flirting with freedom, but by nature of being a communist country that denied their people, first of all, freedom of mobility. Second of all, or I guess there's not really a seniority to this list, but just by number of different things I'm listing, religious freedom. But then the general civic and political freedom that you would think would come out of economic reforms, but when the state owned such a significant amount of these companies, even though their profit distributions or mechanism for means of production were substantially reformed and loosened, they no doubt constricted the ability to have a truly free and flourishing society. Well, one of the things you're not going to hear me do in my criticism today is make comparisons that imply we're one step away from what becoming China. I saw people make utter fools of themselves forever, critiquing US monetary policy or critiquing our stance on the US dollar by making parallels to Zimbabwe or Argentina. And what it effectively did is render any legitimate criticism totally moot, because nobody would listen, and understandably so, once they got done hearing the melodrama that the United States was about to turn into Zimbabwe, an argument so patently stupid it didn't warrant a response. But the fact of the matter is that I'm not making any such suggestion that our violations of a free market economy and the principles that are supposed to undergird it mean we're just about to fall into communist Chinese territory. In fact, I don't think Hayek said any such thing in The Road to Serfdom. He talked about a road, and that one is on a particular part of the road, and that the road leads to a certain place if one wants to keep driving there, doesn't mean you're at the next off ramp. um, I am talking directionally. And I would ask listeners this question before I make my case today, and then before I get to the heart of what I'm really wanting to criticize. Directionally, not in terms of the actual placement of where we are, but directionally, do you feel that China is moving closer to being the US, or the US is moving closer to being China? What is interesting is that my friend Louis Gobb, who I've had on this podcast before, who is a really tremendous economist and thinker, and I hold in very high regard, has talked about this for several years, of certain policies that, as much as the US has been, particularly post COVID, but really since 2015, there's been a real awakening of a lot of the problems of communist China. And so the West has been critical, and I think appropriately so, of a significant amount of Chinese policy, all the while perhaps not recognizing that they were behaving in their own monetary policy, behaving in their own bond markets, behaving in their own currency far more responsibly than a lot of Western nations, and oftentimes including our own. But I don't think that those points negate the just grotesque violations of human liberty and the mere reality of state-owned enterprises that has existed in China. But Louis was always making a directional argument. He was critical of U.S. seizing Russian rubles and taking assets from oligarchs and things, and then of course a lot of COVID policies. So there's, if you went down a list, I'd probably agree with most, not all. But my point being, directionally, you could have agreed with it then or not. But when you wake up and see a headline, US to take 10% stake in Intel, and you think, okay, is there a bailout? No. Intel's a profitable company. Is there a debt default? No. Is there a systemic risk affecting bank depositors? No. The US is taking a 10% stake in Intel and rationalizing it on the basis, one day, of national security because semiconductors and chips are important. And then on the other day is saying, well, we gave them grants for CHIPS Act, and we're going to convert that money into equity. Well, that's not in the CHIPS Act. That's not in the bill. So you can change the bill and then give companies the choice, if they want, in taking grants, to dilute equity shareholders and grant the U.S. government the rights of shareholders. Are they going to do it to all companies that take CHIPS Act money? And why are they doing this for this sector? Well, you could say, oh, because microprocessors or semiconductors are a vital part of national security, so we have to have equity in it. Well, missile defense systems are a vital part of national security. They do not have government stake in Lockheed Martin, Boeing, Raytheon. Maybe that's next. But traditionally, there's almost, we didn't nationalize our banking system. Our banking system is vital to national security and a functioning society. We didn't nationalize energy. In fact, we only have an energy sector because it isn't nationalized. So we're not part of an OPEC cartel. We didn't create our own. We have robust, competitive, beautiful capital markets undergirding with a profit and loss system that provides price discovery, provides competition, and provided an unbelievable result that resulted in us becoming a net exporter after decades of being dependent on bad actors to meet our energy needs. We now became a major player in oil and gas as a result of a privatized sector. There is absolutely no limiting principle to the US taking equity stakes, saying, well, but it's important. I agree, Intel is an important company and an important sector. But the notion of government picking winners and losers, will the government's equity stake be allowed to fail? Will the government's equity be senior to other equity stakeholders? Does this, in effect, change the capital structure of the company? Do we want not mutual fund managers, hedge fund managers, pension managers, people participating in profit and loss, but do we want Elizabeth Warren or Donald Trump or Barack Obama or whoever you want? Name a cabinet secretary or a senator or a committee finance chair or a president. Do we want them voting proxies, making decisions on executive compensation, making decisions on company strategy? And by the way, doing all this with other people's money, a country that is, I should add, $37 trillion in debt, that perhaps has not been a great steward of their own balance sheet, there isn't even a prima facie acceptability to this outlandish idea. And when people say, well, what about the Wall Street bailouts in '04? Well, first of all, the bond bailouts of '04, which is what they were, an attempt to inject equity so that the bond market didn't tip over and depositors didn't lose money. They did inject a convertible equity stake that came at a high coupon so as to incentivize the companies to pay it off as soon as possible and refund the taxpayers at huge profits, all of which they did so. And the companies, some of which were forced to take it against their will, some of which it was a backdoor bailout. They simply didn't need it. And their equity paid a significant price. Lehman died, Bear died, but AIG stock was crushed. Citigroup stock remains crushed. So it was an outlandish thing that happened, done in a very poor way, but that's not what happened. But it was done on the basis of some sort of systemic risk to the economy. And there's no sensible people that talk about that anymore. It never should have happened. It never should have needed to happen. But no one is arguing that we have to take equity stakes or do licensing deals with Nvidia or get a piece of U.S. steel for this venture with Nippon Steel because of any kind of risk to the economy. This is government control. And there isn't a single person that likes this administration that would be approving of this policy if it were being done by Joe Biden or Barack Obama. And you say, well, yeah, but they're not president, and Trump's a businessman, and I trust him. Oh, stop it. President Trump will not be president in 3 more years. This is not about liking a president doing something that you don't believe they should be doing. It's about understanding the limiting principles. And this is where my criticism comes. I don't expect a lot from Secretary Lutnick because I don't believe him to be a conservative. Donald Trump says a lot of things, doesn't follow up on a lot, but he's not an ideologue. The people that are most silent on this, and in some cases not silent because they're actually saying, well, we think it's a good thing, ought to be ashamed of themselves. There is no chance we maintain a market economy, the profit and loss system, one rooted on getting price discovery from which free actors make decisions in their endeavors, in their natural course of human action that goes to produce goods and services that meet the needs of others, and in so doing have their own needs met. There is no sense in which we can believe that government equity ownership is going to facilitate non-corrupt, clear market economy. Now, one of the criticisms I've seen is, okay, these things are wrong, but we've done it before. We've been doing it. Don't act like we've always had this crystal clean market economy. My friend Brian Wesbury's made that argument from First Trust, and Brian's right. The General Motors interventions, people can talk a bit about the TARP side. I've already said there's some more complication there, but from Chrysler to utilities, there's been government interventions, usually predicated on some, pretense of an emergency. I still disagree. I believe Risk takers need to experience failure. And I believe that risk takers need to experience gains. And the skin in the game concept that underlies, first of all, it maximizes knowledge in a decentralized economy, but it also allows incentives and therefore human nature to do what it does best. But I don't understand the argument that because we've done it before, we should do it again. Well, we've done it before, we've been critical of it before. So two wrongs make a right fallacy is not going to get me anywhere. The fact of the matter is, it's rank partisanship. We're against it when the other side does it, and then now we want to become for it when our side does it. It's totally unacceptable. I would argue this is worse because A, we do know better. B, there's far less pretense or prima facie kind of rationale. But C, there is a real table being set for full-blown nationalization of certain sectors. If they were talking about regulation on the edges of things necessary to enhance national security, then it becomes a prudential conversation. So in theory, I support it, and then in practice, we have to look at what it entails. But a government equity ownership funded by deficit spending, whereby the federal government now has a vested interest in one company in one sector or in multiple companies in a given sector, but not in other companies in other sectors, is a total violation of equal protection under the law. It does not allow for the market neutrality the government is supposed to provide. They're there to secure rights, property rights, that facilitate free market actors acting. The common equity ownership in Intel, a revenue interest in Nvidia, so they can do the thing that the administration said they were trying to not do. They wanted to limit trade with China, decouple from China, break down this economic alliance with China, and now instead said, well, we're going to get a royalty from Nvidia in exchange for them selling semiconductors to our great rival, our communist rival. I don't know what to say about this. From the intervention with Intel, the Nvidia deal, the government expressing their opinions as to who is supposed to be CEO of a company and who better not be, telling Goldman Sachs to fire their economist because they had a report that the president didn't like. I am not guilty of Trump derangement syndrome. I call a spade a spade. If there's a policy I like, I could be wrong, but if there's a policy I like, I say it, and if there's a policy I don't, I don't. I'm asking my friends on the right to recognize how horribly this is going to end if we believe it is okay for the president of the United States to tell a private company who they're supposed to hire and fire because of whether or not they like the person or what they're saying. It is a violation of like every single thing we believe in a liberal society, and you know it. What we are needing right now is a refortification of the market principles that would actually limit the power a company like Intel has because there's more competition, more companies, microprocessors. Now they come out and say, well, maybe we'll do it with Micron too and some of the other competitors. Listen, nationalization on the margin hurts competitive growth. It is cronyist and it is lacking in limiting principle. Therefore, it will be a road to serfdom. We're not going to be communist China tomorrow or in a month or in a year. But what we're doing is losing the moral high ground to oppose communist China being communist China. There are principles we have to hold on to. And there's room for debate as to where regulations are appropriate, not appropriate, where taxes are appropriate, not appropriate. I'll even grant that there's room to debate on certain elements of trade policy. But I'm sorry, it is absolutely untrue that the government taking an equity stake in private companies is something that we can possibly support going forward. We need to oppose it, speak out on it, and do so not because of who is president, but regardless of who is president. We should do it because we want to defend a free market economy, defend a free society, and uphold that which will drive human flourishing. Thank you for listening to David Bonson's Capital Record.